Good evening, peoples. All right, I have another fear, greed. What can we expect? What's going on in the stock market? What should you do? So, hopefully, you guys have seen that I've been trying to alert you. It's been really going on for about 60 days, but as I said, I had some surgery. I was out of pocket. So, I wasn't able to produce all of this, but I'm on a whirlwind rather than just give you guys simple updates. But hit me up if you're missing, my round hill comparison to defiance and that. But honestly, I feel like views are down in general in the market. I know what it's like before I was ever a YouTuber when the markets were going against my positions. And so I wasn't in the mood. I sure if you find out what YouTubers are saying, but in general, you don't want to just see, oh, okay, Roundhill paid 17 cents. I was hoping it's more, but man, I'm down so much now, right? So you don't even want to see your income stream. You're frustrated with your potential capital losses, knowing that that in turn is going to lead to less income. So let's get out of that mode a little bit. And I'm trying to look at this on I want to teach you guys what I did in the 2000s, and that time is on us again. So I'm not saying that these NASDAQ stocks are never going to recover. I think if you get down to 50 or $60 in NVIDIA, it'll be a hell of a buy, and maybe it'll go to 140 again, but I think it's very likely headed to 60 from the last time it was at 140. So, time is everything. So let's talk about what all is going on. And this will probably be my final video short term. I'll do weekly updates, but I think this one will give you even more impetus. Every time I do one of these, the last three that I've done, I keep building on things a little bit further to educate you guys. So this is put out all the time from CNN. They have something called the Fear and Greed Index, right? And so this one's for the close as of April 4th. Well, as you guys know, Thursday and Friday were bloodbaths, right? I think we were down 1,500 on the S&P on, one day and then 2,200 the next. But, we're now officially down something like 15%. So right at the close, and that's officially a bear market indicator. Well, I could tell you that's exactly where we were heading a few days before that. I just wasn't available to do videos a couple of weeks before when I could see the topping pattern happening and formulating my own strategies, even when I was in the hospital. All right. So you have fear and greed. There's a whole bunch of things, but the net, it sums up. They look at the VIX, they look at the put call ratio. There's like 7 indicators. But here's the net, it's a 4 on extreme fear. Greed means, oh, it's a fear of missing out. The market's hitting new highs. I'm going in almost like gold right now, right before the last 2 days. Everybody's piling in. So gold's going to get a pullback, but I'm going to go into the details and all the comparisons on where I think the markets are going by sector, gold and silver, the industrials, the S&P 500, the Nasdaq, and what should you be doing and what should you be looking for? So here's the extreme fear, right? We're just showing the S&P and its 125-day moving average. Now, the reason they're using 125-day moving average is because there's typically, we know there's 365 days in the year, but of the trading days, there's about 250. So think of it as a 6-month moving average, 125-day moving average. So not a 30, not a 50. Some people use 200, but this is pretty substantial, right? And it's not a good indication that you'll go back to new highs until you get back here above that index. When you're below, that's not positive. All right. So while there's, oh boy, my spelling went, while there's rampant fear, okay, in the markets, we're also close to an initial 100%. Sorry, I just on Fibonacci, I didn't know the spelling. I should looked it up, but you guys get it. While there's rampant fear in the markets, we're also close to an initial 100% Fibonacci retracement levels. I could get into technicals and pull the charts, but let me just share with you. There are numbers that are found in nature and history. Go Google Fibonacci to see it reverse bigly when I type, I like always making typos. I know how to spell, I just get too fast and make errors. So it's not like in Word where it points it all out. I'm using Excel here. Uh, so sorry about that. Just probability when I see him. All right. So this Fibonacci. So anyway, I went to a bunch of technicals, calculated stuff, didn't end up copying and pulling it over here, and said we're pretty close to the next bounce level. Okay, so before you go look at this Fed rate cut since 2000. So we're very close. What I suspect could happen, again, it's not 100%, but I've already seen it on silver, right? I was watching silver and gold, and as you know, those trade big time in the 24-hour market. Um, so when you get down, what'll happen is you have a lot. There's not many people through the Friday close that wasn't aware that the stock market was down big, right? 2 consecutive days with all the Trump tariffs. That was on every newscaster. But there are people, I've been there, where you're so busy working, you're so involved in your work, you don't have time to go do anything. So you get home on the weekend, you look at YouTube, you watch the news, however you get information, and you say to yourself, oh my God, mass fear. I got to go in and stop the bleeding. I've only got 12 years. I can't have this thing going down anymore. So you panic, right? Which is the part of fear. And you go in and you put an order in and say, hey, sell. And so what happens on Monday morning, I call it the dumb money, right? So the dumb money puts all these sell orders in. So what happens? The smart money sits back, watches it flush out, right? So maybe it drops down pre-market because there are 2 or 3 hours depending on your retail broker, and some of these have 5-day, 24-hour trading. It all depends on the symbol and stuff like that. And then nobody has 724 because the markets just don't operate like that. But more and more of the brokers have 524. But again, if you're in futures or something, then that's a whole different way of doing this. So my point is, a lot of people, but I already saw in the physical metals and gold and silver, I already saw a bounce in there. Okay. But I think in the retail, let's say you own a bunch of Mag 7 or you own a, S&P 500, you own the index. You're going to panic and you're going to say, I'm getting out. It's probably going down another 20%. And it is going down very likely another 20%, but not in the way you think it is. Okay. Oftentimes, again, I can be wrong on these short term views, right? Maybe we reverse before and it starts up. But regardless, what this is a bounce, right? We've gotten down close to 5,000. Okay, we're very close to this 100% retrace after you calculated a Fibonacci, 618 pullback. And we're almost there. So it's very likely that these sell orders that the panicked public does that aren't swing traders, they're not professional traders, they're not people that really know, they're mainly, 401k and investors. And they see all the news and hear all that, and they want to stop the bleeding. So they sell at the exact wrong time. And what happens is that first 15, 20 minutes, the market goes down and it creates a candlestick to the upside, right? It immediately reverses, and that's the big money, smart money all coming in saying, hey, we're going to go back up from 2 to 5 days. We're going to go back and retrace 61.8 or 50% of the whole amount of down of the last 2 days. I'd bet on 61.8. And guess what? When you get up there, now that can take 2 days, that can take 5 days, 4 days. It's not, nobody can tell you perfectly these things, but that's a very highly likely occurrence. So when that happens, everybody's going, "Yeah, baby, I got my Nvidia. I got it at Well, they do the opposite. Most of them say, "Man, I got out of Nvidia. I put an order, and I want to stop the bleeding. Let me just pull up a chart of Nvidia and see where it closed on Friday. What was it? 98, 90? I don't recall. Just a big tech as an example. 94. Okay. So slam down to 94, and it was at 110 on Wednesday. So that's a big downdraft, right? That's your 13, 14. I mean 7% just on Friday. So my point being, don't do that if you're in that situation. However, I want to calmly explain to you what I think we're going through. Okay, that we will see. Okay, I can just pull over this chart. It's not, I should put a trading view. So here's NVIDIA. I suspect we have at least down to this 80 range. Okay. But what you could well see again, if this Monday bears out like I think, right? That it opens, maybe touches 89, 88, 90, and then turns around and closes back up 98, 99, and over the next few days, we go back up here, maybe as high as 120. So you see a retrace back up, because you have to say here's the last real high, right? 2 months ago, beginning of February, 150, and we pulled back to say 88. That's about halfway. It's 62, not quite the 75. But the point being, this is only a bounce back up. So this is where I was going. Don't run in there and go, oh my God, I got NVIDIA and plan to hold forever because I snagged it at 88 or 89. Because guys, it goes to 120, and then you look down a month later and it's at a new low. It's at 80. And you're like, what just happened? If you want to swing trade it, by all means, do that. But I'm talking, a lot of you aren't trying to do that. A lot of you that are probably following me were probably owning it as an income oriented. Well, this is not a good situation, right? Regardless, let's just say your average price is 120. Well, when you're down here at 94, I mean, I think they just went under $1 on their last dividend. So all of a sudden, on something you're used to getting $1.80, $2, high twos, and every time the thing goes down, it recovers and goes back up. That's not the situation you're in right now. As I said, it's possible if this thing deepens that you could see $50 on Nvidia. But I would probably load up on it. I'm not a huge Nvidia fan. I like other stocks better, but I think at $50 it could well go back to 100. It could go back to 120. So there are just bargains out there. But all right, so enough of that. But I wanted to just try and give you guys, just go slowly. All right, don't panic. So let's talk about more things here that I have to talk about. So let's talk about gold and silver. We're going to go back and forth on the S&P and the Nasdaq and the Mag 7 and all that. Okay? History shows us that in a gold bull market over the last 25 years plus, gold bottoms around the time rate cuts appear. So this is a really cool statistic. There isn't many things in gold that I haven't studied, watched other people, follow other people, pick up and use the material. There's just tons of it. Some of it dates all the way back to the 2000s, right? And some of it in the 2000s was talking about things that happened in the 80s, the 70s and 80s in bull market. So again, there's not much that I haven't experienced and or played or studied. So the Fed rate cut since 2000. So you can look. And so what's this telling us? This is telling us very likely, okay, that we're not going to see gold go below 2,500. I personally think we're probably, the bottom would be 2,750 to 2,850 in this scenario in April, because I think April, we could get a lower NASDAQ and all the rest of that stuff later this year, but April will be pretty ugly. Okay. And likely, I've got some charts on how long do bear markets last, what's the percentage of drop, what are the average, the last 10 bear markets, how long did it take for them to go down, which, guys, by the way, you're always going to hear this from really smart people that you take the elevator ride down in a bear market and you walk up the steps in a bull market. It's just so true. It takes longer for the bull market to develop. Your percentage gains aren't near on a daily basis what they are. So if it takes 9 months for a bull market to form, the bear market can happen in 6 weeks. So you can imagine if you're retracing 60, 70% of what took 9 months in 6 weeks, you got some pretty big candles. You got some pretty big down days. All right, guys. So let's get through this. Let's keep you going here. So I use this as sort of a safety net, but the reality is now, how many of you buying physical? Maybe nobody is. I own a lot of physical. I'd say 70% of my net worth is in, maybe 60 in physical metals. Only because I'm in Asia and I sold my residence some years ago. A lot of you are going to say your wealth is in real estate. Not that I think it's bad, although I think that market over the next 3 to 5 years is not a good market. Not unless we see a lot of the Trump things really start to take hold and fix America. Otherwise, real estate's just too expensive. I don't see anybody that can afford um, only the high end properties. All right. So, but there's nothing wrong with owning real estate. It's just, again, it's like timing. All the houses I bought and sold in rental properties, some did much better. You look back to when's the right time. All right. So this is Fed rate cuts, all right, talking about gold. Whoops, I must have doubled this up. All right, guys. I meant to put the silver one in here and it doesn't look like I did. So there's a silver one here and it's 29 something, right? So it's saying the real buy price. But I will say to you later, I have a chart. It says silver is very likely sometimes to go back and go lower than where it was when the rate cuts happen. All right. So silver is always a better grower, always moves more volatile in the second half of any metals bull market. We're not yet in the second half of that bull market. So silver, when it gets really running, silver has to get above 50 to break its old-time highs. But, silver probably has $150 to $200 upside over the next 5 to 7 years. But that 75 to say it does get to 200, that'll all probably happen in the last 2.5 years, and you might even see 60% of that move happen in the last year. It's just what it does. Go back and look at the silver chart and look at the 2001 2000 to 2011 bull market. Silver pulled back to under $10 in 2008, late 2008. And then, in 2011, it was $50. So that's 3 years to go up 4 times from $10 to $50. That's just what it does. I mean, I was buying it well, I wasn't buying silver as much then. I was buying silver miners or miners that had over 20 or 30% silver production out of their total metal production, which is definitely a high in the silver game. Nobody does 80, 90, 100%, just can't do it. You know, silver is a byproduct of mining other things, and there's other minuscule byproducts, but you can never have a mine that's 90% silver and, 10% gold. It just doesn't work that way. All right. So here's something else. So, how have gold and silver held up as the safe haven so far in this 15% or so pullback in general equity? Well, it's done very nicely. Thank you. Here is a chart that I forgot who I got this from, um, but it's out there. If you Google it, you'll find this. And then I played around with putting the percentages in here and showed you how they've grown. But here's now this does not include bonds and does not include real estate. Otherwise, it's all assets, including public companies, precious metals, cryptocurrencies, and ETFs. So if you go out there, the number one performer, okay, over the last 30 days is gold, 54%, okay, in the top 10 assets. Market cap 20.48 trillion, okay. But that's all the gold in the world, right? That's all the gold that's ever been mined that's out there. But you look at Apple, Apple's 2.829 trillion. So you could just about figure that that's 5 or 6%, right? Whereas gold, because it's more than 1/10, it's probably 8 or 9%. So Microsoft 2.65, Nvidia still 2.3. So when you start adding these up, you see these guys make, your Googles and your Amazons and your Nvidias and your Microsofts and your Apple. But what's happening here? Saudi Aramco, because this is global companies, right? Bitcoin doesn't if silver is 4% and Bitcoin would probably be 3% based on this number, right? So Bitcoin's got a long way to go if it can prove itself all the way. And here's Facebook Meta, okay? So you can see the charts on these guys. But you don't see a similar chart in gold. Gold and silver have only recently, really the last 2 days, shown that they're going to pull back some. But that's because the bear market got aggressive. All right. So their total percent, 54 plus 4 is 58%. A week ago, they were 56.4. They were 55.3, 54. What's that showing? It's showing you an uptrend. What did I say to you guys in some videos? I said, the markets have changed. Over the next 5, 7, 8 years, you will see the precious metals, the miners, which are waking up, along with the metals, outperforming the S&P and the NASDAQ. It's just a change. It happens in decades at a time. It's what I played in the 2000 decade. I found gold because I was in high tech. I owned a lot of stock. I lost a lot of money and stock value. Some options granted, some stock I bought, some stock that I could buy cheap as an employee, and it just got killed. I speculated like a lot of people did in the dot com. Started believing, my own I started believing the BS that it doesn't matter. It's eyeballs is all that matters. They don't need revenue. When you start hearing all that traditional stuff, it's AI, man. Don't worry about the money right now. It's what's coming. Yeah, worry about the money right now. These markets are ripe. Look what, at the end here, I'll show you what Warren Buffett's been doing. And everybody's like, has he lost it? Is he just an old man who doesn't know what he's doing? Well, no, he's not. He's old, but he knows exactly what he's doing. Year to date, gold and silver to General Equities, right? This is only 2025, so you got 1 quarter here. How's your Nasdaq doing? How's your S&P 500? 19.7% on the Nasdaq, right? That's definitely bear market. S&P 500 is right at the cusp. How's your gold doing for the full year? For the full year to date, 15.8. Silver hasn't really woke up much, 2.4. But compared to the S&P and compared to the Nasdaq, well, guess what? If you look at the miners, they're probably like 3%. Wait till they get going, people. That is where you want to be. It's not your Nvidias. It's not, I would say the only stock that I still love in that area, regardless, is Palantir. All right. So how about a 1 year comparison? Let's go back from, April 1 to April 1, 2024. Okay. Because everybody, oh yeah, but the NASDAQ has been doing great. Really? Looks like it's down 5% to me. It's down 3.5. I mean, you're going to have those kind of years. If you took the full year of 2024, you're probably 28% and 20%. I don't know the numbers. It's a guess, but this is probably pushing 30% in the year of 2024, and this is probably not that far behind. You had great years, right? But that's ending. That's why we were so overvalued. That's why these highs. It isn't where you want to be in the next 6 or 8 years. Again, if you're 25 or 30 years old and you want your 401k for 30 years, then to me, you should be buying commodity kinds of things. And then when it switches back to traditional stocks and equities that they're going to do well, do the next decade in those. It's not, I mean, I shouldn't say it's not rocket science, but once you've been exposed to the kind of stuff, I can teach you a lot. There's people out there, but some people are so just gold and silver. I still like to look at the other stuff. I still like to analyze what's going on, but I know where I want my money to be. All right. So where's the S&P 500 headed? Where's the Nasdaq headed? Likely much lower. Now, having said that, not without upside bounces, up city bounces. I really do know how to spell, people. I don't know how to type, but I do know how to spell. Not without upside bounces, as in all bear markets. Okay. So Warren Buffett starts aggressively moving into cash. Boy, was that guy an idiot. He was cashing out at 52.50. He didn't even get all that 6,100. Is he losing it? Is he just too old to understand what's going on? Well, you tell me now. This is probably where we're headed, 3,600 to 4,000. Now, I'll talk to you about how long it may take to get there. 4, 6, 8, 18 months. Could take as long as 18 months. But that only makes it worse, right? Think of how many times you do this. How many zigzags do you have here to get there, right? Down, elevator down 3 floors, right? Stairs back up 1.5, elevator down 2 floors, stairs back up one. Not a lot of fun. Not unless you want it as a workout, right? You're trying to lose weight, trying to get your cardio, then it's fabulous, right? Ride the elevator down and run up the stairs. So, guys, that's the markets. That's what they do. If you want to be a swing trader, these are great things, but it's always better if you have an idea of what's ahead, generally speaking. Like this Monday, that's a guess on my part, right? I was hoping to snag silver in an AGQ, go buy a 2X silver and catch silver around 29 on its cash price, and then have it bounce, to 33 and sell out. But that's not me saying we bottomed and I'm going all in on silver, right? If you want to just be patient, because I do think that silver breaks 35 and goes on to 40 and 42 minimum this year, may go to 50 this year. But I can't tell you when because I don't know how long this tariff issues and geopolitical war and all these other things may shake out. But I own some AGQ now from lower levels, and it may go lower than what I own it. And I don't like being underneath. But if I start seeing that, then I'll just sell some higher calls and let them expire and pick up a little bit of cash. So there's ways to play some of these things. But I also like to swing trade when I can. So I already saw silver go as low as 28 and a half spot price, and then it was back to 30. Let me check it right now because that was a few hours ago. Let's see, spot silver price. Yeah, it was down, depends on which place you look, down to 28.29. It looks like right now, at midnight on the West Coast, or 12:30, at 30 minutes after midnight on the West Coast, it is 30.22. So that bounce is already in, but I can see the metals bounce without the initial bounce that I told you about. I have a funny feeling we open lower. The pre-market clearly will likely be down in all the indexes, the Nasdaq, the Dow, the Russell, the S&P, but I do think that they'll recover today. Not a positive, it's not absolutely got to happen, but that's my gut. Let's see. You can tell me in the comments later, oh, Bruce, you were wrong about that. Again, it just, I'm not playing that. I may play some of these metal plays because I know they're not going to be down for 6 or 8 months. All right. So anyway, that's guys. This is not here to give you bad news. It's just giving you what I think is what the probability is, what the technicals tell me. All right. The good news is bull markets last a lot longer than bear markets. But guys, we're a little long in the tooth. When one of the smartest investors ever, Warren Buffett, sells, everybody's, oh, you're selling too early. Well, nobody can pick the exact top, nor can anybody pick the exact bottom. I'm a perfectionist. I see a lot of numbers. I'm good with numbers. And no matter what I do, I can't pick the exact bottom and the exact top. I'm terrible at some of it. I loaded up, if you guys recall in my videos, I loaded up on UVIX, which is a 2x of the VIX. And typically that gets down around 25, 30. And I was buying it even at 35. And it would have a quick spike to 45 or 50. I'm talking quick where a day and a half it was there and then it's gone. And I was greedy. I was like, well, I got to sell in it for 60. And so after about 3 months of holding it, it's kind of like insurance. But I didn't want to go buy options, put options on the indexes because they're going to expire in a certain period of time. And, all you lose is your capital. But if you spend 5,000 hoping to make 50,000 because you 10x your money on a put and it doesn't happen, then you were wrong, right? And it happens 3 months after your puts expire. So with the VIX, what I started doing after I held them for 3 months and they'd go back to 30 and my average price was 36. I'm like, well, I'm $6 down on 36. I don't like being down 20%. So the next time they ran, okay, was a few days ago, and I got up to 45, woke me up. It got up to 50. So when one of them was at 50, I said, okay, my average price is 36. I'm going to sell out in June a $55 call, right? You take it away from me only if it's $55 or more while I own it at 36 average. So that's $19. And I sold that call in June for like $18. So I got half my money back that I even paid for the 36 right away. So I staggered into these. I had like 400 shares, right? So each call is 100, as you guys know, one contract. So then when I got up further, it got a little higher into the 50s. They said, I'm going to go out to September. I don't know where it's going to be. Even if it's back at 30 and I get a bunch of money, I'm ahead of the game, right? So I sold a September, I think it's September 20th, 57, 53 call for 27.40. And I only paid $36 for the stock. So I got 27 back in a call. Nobody can ever take that's my money. The only thing they can do is buy it from me at 53. Well, what does that do for me? That means I got a $17 profit, right? And I got 27.40 in calls. But I like having that money and having the flow. So then, guys, fast forward to Friday. I got another 100 shares left and I'm in a dilemma. I own it at 36. I got an order in to sell, I think a 65 to try and get like $19 the day before, and it wouldn't go off. So I look at pre-market, and the VIX hit 77 in the pre-market, but it pulled back to around 68 when the market's getting ready to open. So I go, damn, I canceled that 19 sell because I knew it was going to open up around 25 or so. So I went in and I made it 30. I said, I want to sell a 65 for September at 30. and within the open in a little bit when it was around 68. Now, I could have just sold it at 68 from 36 and made a bunch of money, but I have a feeling these spikes are going to go up and down. After I sold that 27 one, a week or two ago, I went back to having like 17. I could have bought it back for, like 1300. So I could have pocketed half of that call. But now I'm having to wait for it to go back up to get money. So that's what I do sometimes when I say I swing trade these things with options and stuff. Sometimes I don't use options if it's a low cost thing. So there's a lot of strategies that you can do. Sorry, guys, I'm talking about that, and I've got these other. I don't have a visual. I should put those up here one time. But I like to educate along the way. I like to give you examples. And even I, with 40 years of options, I find that I'm doing new strategies on something because when you're betting on the VIX, don't just buy options because you can be damn right about the direction and wrong about the timing and you lose your shirt whenever you purchase calls or puts based on the direction you think you're going to go. Okay. I like to be the seller in the market. I like to sell puts or sell calls. So I was selling these calls once I sold them. So I got 30 out of 36 back. I got 27 out of 36 back. And I got 17 out of 36. And I'm still holding long 100 shares that I haven't sold either way. Because I think this next will move up. The VIX will go back to 40. And we get another down swift. Maybe it goes to 150 next time. And I saved that last to just hit it big and not even sell a call against it. So, that's what you have to do when you lag into these things. When you see a super bargain, lag into it, buy a little bit of it, but don't go hog wild either direction because you really don't know. You only know probabilities. All right. So, what's important here? Again, I've been saying elevator downstairs to recovery. So, going way back, this one's much more than the 2000. They're showing you the S&P decline. They picked S&P in this chart, okay? So 21.6, that's a healthy pullback. We're at 19. Length of bear market in months, 15 months. Well, I think we're 3 months into a bear market. Well, really, because I think even last year, February may have hit another high. I'd have to go look at it. It hadn't been that long that it's in a. I know that year to date we were down bigger. So I don't know where we are in terms of month. But let's go to averages because you're going to see this all over the place. So your average out of all these bear markets. Look at this. This was COVID, in 1 month, right? Down 33.9. It only took 5 months to recover. So on average, it takes 13 months for the elevator to get completely down to bottom in a bear market. And what does a recovery take? 2 effing years, guys. 2 years. Double, right? Call it 12 and 24. It's a double. So keep that in mind. All right. So what are my likely pullback ranges for gold and silver? As I said to you, there's a lot of calculations, and I looked at, rate cuts, all that kind of stuff. Silver being more economically tied to recession and what happens in the general stock market until the latter part of the bull metal run in metals, and then it just goes ballistic. So these rate cuts are going to be nothing but positive when they happen. Gold and silver always do better in a rate cut environment. So, but could we go back to 2,800? I think we're at, what's gold at? 3,000. I think gold pulled below and then it came back up. Let me do right now gold spot price. Kitco's been down a lot. I use them a lot. I can't tell what it. I'm going to use something different. I don't think Kitco's working. Yeah, it's not. Live gold spot price. JM Bullion sponsored site. 3021. Yeah, I think it was 3037 at the close, so it's down 15. Silver is only showing up 37 cents, gold showing down, which just could be just the opposite of what I'm saying. It could be an indicator that the industrials, we're too far away from the market open for these pre-market to really be real. But that's saying a 1.25 uplift already in silver from the close, but a 0.5% decline in gold, which is likely. I mean, gold's gone down very little. I mean, the top's below 3,200. All right, guys. So the other thing is we now have a higher probability of rate cuts. Four. Okay, and you can go out there. There's some great sites for that. I use Garrett Soloway on his, but there's a whole bunch of sites on the Fed on the probability of rate cuts. Right now, it's 68.4% that we'll get four rate cuts in 2025, which is just going to be kick butt for the metals. And it doesn't lessen the recession or stop the bear market, but it certainly doesn't feed it anymore rationale for going down further. It's going to do that whether it wants to or not. There's only a few times that gold stays up above 100 in the gold silver ratio. I recall 130, 140, a few years ago. But likely this is headed much more in the metals bull market. And you want to start looking at this to shift. The fact that it's running just says to you we're very likely in a bull market in the metals, and we already know that. Anybody that looked at the gold chart sees that. I mean, it's impossible not to see gold. And that's central bank buying and everything else. Like I said, silver will get whacked lower. I mean, if silver goes, I remember I told you I thought the low could be a range as low as 23 and a half to 28. Silver is a great buy at 28. If you see 23.50, you should be all over it. Now, there's a lot of things you can buy in silver. I do recommend, rather than SLV, I do recommend like PSLV, the Sprott in Canada, because when you buy those, they're forced to go buy silver. There's so much paper silver in the COMEX that I'm not sure these guys really, they just spoof it. They just, act like they have all the silver there. So you're really not doing the true market an advantage. I just go AGQ. I don't know that it triggers real silver to be bought, but I like the leverage. So it's enough to where I can get by on that. But if you really want to be, because I already own a bunch of monster boxes. I own hundreds of American Gold Eagles. I own some Canadian Maple Leafs. I own some, what are my Chinese? I actually won those in the sales pandas. I own some 1988 pandas from a sales contest I won. It's like 2 ounces of silver. Do you know what they were worth when I was given those? I think it was 1990. I had to pay taxes on them, right? Because they were like a gift from the company in the sales contest. But I remember having to pay taxes. I had to declare what they were worth. So when the company gave them to me, what did they give them to me? What was the spot price? $250. So I'm up a little bit on those, right? They're actually beautiful little coins. They were half ounces. They make a 1 ounce, but 1988 Panda Bear, beautiful, beautiful coin in seal plastic. Still got those, four of those at 2 ounces. I've thought a few times because in my bulk of my American Eagles and even the Canadian Maple Leafs, those are in the tubes of 20 each. So I'm not as apt to want to cash those, but when you got just four, plastic half ounce, a few times I called I'm glad I didn't because the last time I was thinking of selling was 2021 and it was like maybe 1800. Even though I thought at the time, well, that's great. I'll just get rid of them. I don't like loose things. I can store big, bulky stuff in safes, but when they get small, all right, guys, more info than you need. Let me wrap up here. So don't forget my fear and greed when I showed you that. You should be afraid now, and you might panic ought You might panic to greed, okay, when you see a low price and go all in at a low price. Only, like I said, oh my God, Nvidia's 88. I'm loading up, right? Or even worse, you're going out and buying Nvidia. Now you want to hold it so you can get your in. Well, guys, in a month, if it goes back to 120, it's probably back at 75. Now what are you doing? You're kicking yourself. When you own these income funds, you know, the fund doesn't go up the way the underlying. If you want to just swing trade Nvidia, more power to you. It's what I do with Palantir a lot. But owning these yield max income, I mean, you can own GDXY because I know where it's going. But is that the best income you can get for gold and silver? No, not at all. But if you just want to play something, you know what to do and when your payment is, you can do that, and you'll come out ahead of if you just left the money in cash. All right. So resist that urge, but set up a plan. Read my material, study my material, look at it, ask me questions, build yourself a plan for your future. And I'm trying to tell you, this is a 3, 5, 7, 8 year plan that you can plan to evolve to capitalizing on precious metals. There'll be some opportunity. There's a huge opportunity in uranium right now. The uranium miners are just beaten down. Even the spot price is low. That's not going to stay that way for that long. So I'll give you guys a list. I owe you a uranium video to give you a list of my favorite uranium miners. CCJ is just one of them. It's the biggest North American miner. But there's some other really good ones. Gold Royalty Corp. I like Denison, a little more risk, but a lot of upside. There's a number of them. All right. I don't ask this much, guys. But you see, I'm putting a big effort in here. And by the way, let me know if you say, Bruce, I still want to see your round hills and your yield max comparisons and your curves. But I'm trying to chase this path that I know so well, and I know it's the right one for you guys. That's why I'm hammering it. But the views are pitiful. But they're pitiful mainly because everybody just wants to turn the tube off and forget about the damn market. Um, but there's a lot of expertise here and a lot of views. So I'm asking, please subscribe if you're not. I know some of you, if you look at any channel, 40 to 60% of the people that watch it aren't subscribed. I've done the same thing. I have travel guys and stuff. I've never subscribed. But I need it. I need your support there. Tell your friends and family if you enjoy the content. Okay. And I promise to keep you up to date. Okay, on the generational metals bull market ahead and how you can make money. Okay, again, Bruce with Targeted Wealth Creation. I'm not a financial advisor. Hope you enjoyed this. This is the last one for the weekend. I'll do probably a mid market update. All right, guys, bye for now. Have a great one.